You don't need a financial advisor to become a multi-millionaire. I've helped millions improve their finances, and I'll share the 5 cheat codes anyone can master. No complex portfolios, just a proven system that builds real wealth. A 1% advisor fee sounds tiny, right? Wrong. On a $100,000 portfolio, you're not just paying $1,000 per year in fees, you're also losing the growth on that $1,000 for years to come. Say you invest $200 a month starting at 25 without an advisor, you'd have over $1.7 million at retirement. But if an advisor takes a 1% fee, you'd have just $1.3 million. That seemingly insignificant 1% just cost you $400,000. Here's the solution. Index funds with low expense ratios like VOO, VTI, and SPY. These funds have expense ratios between 0.03% and 0.1% instead of that wealth-crushing 1%. When you buy an index fund, you're buying a piece of every major company in America. You don't need to pick the next Apple or Amazon, you own them all. And the best part? When the next breakthrough company emerges and grows large enough to matter, it automatically gets added to your index fund. Market timing fails because nobody can predict short-term movements. Stock picking fails because even professionals can't consistently beat the market. But index funds capture the long-term growth of the entire economy. By the way, if this video is helping you, please like and subscribe. It helps more people find practical money management tips like these. Tax-advantaged accounts are your secret weapons. Start with your 401k match. This is literally free money. It's an instant 100% return on your investment, so max out that match first. Then, fund your Roth IRA for tax-free growth. Here's why this matters. You pay taxes on the money going in, but everything it grows into comes out tax-free in retirement. If you put $6,000 into a Roth IRA today and it grows to, say, $60,000 over 30 years, you keep all $60,000. With a traditional account, you'd owe taxes on that growth. So for young people especially, a Roth IRA is a wealth-building superpower. Here's something that makes wealth inevitable. Aim to save 15% of your gross income, but start where you can and increase your savings rate by 1% every year. Let's say you start at 10%, next year go to 11%, and the year after 12%. You'll barely notice the difference, but over time, you're dramatically accelerating your wealth building. Most people get raises that cover this increase anyway, so your lifestyle isn't impacted. But the real magic happens when you automate it. Set up automatic transfers so the money moves to your investment accounts before you even see it, and gets automatically invested in index funds. This works wonders because it removes emotion from the equation. Ignoring the noise is the hardest one. You'll face market crashes, scary headlines, and friends panicking about their investments. Your job is to do nothing. Wealth is built by people who don't sell when things look bad. Every market crash in history has been followed by recovery and new highs. After the 2008 financial crisis, the market fully recovered by 2013, and after the 2020 crash, recovery was in less than 6 months. The people who sold during the scary times locked in their losses, but the people who stayed the course came out ahead. These tips will dramatically increase your returns, but you're likely making other mistakes that cost you tens of thousands. Watch this video before you invest another $1 to avoid these costly mistakes.